And throughout the pandemic, actually, one thing which has become very clear is this growing realization that a lot more focus needs to be on ESG. ESG being the environmental, social, governance norms. So, really, what has been the kind of interest that we have seen in a post-pandemic world? Let me invite Mr. Chandresh Nigam, the MD and CEO of Axis Mutual Fund. Mr. Nigam, thanks very much for joining in, and also because you've been one of the early proponents of ESG in the industry. So I wanted to ask you, what has been your observation over the last 1.5, 2 years? Is investor interest growing in this space?
First, thanks, Sumaira, for having me to talk about a topic which is really very close to our heart in Axis. We're really passionate about ESG. And let me just, before I answer your specific question, let's just talk about why we all know that world over everybody is interested in ESG. What we have actually tried to do is to integrate it into our investment process. In a sense, when you look at equity investing, and we'll talk about fixed income investing as well, uh, people have been looking at sustainability of business really providing wealth creation or returns on the equity side and control of risk on the fixed income side. And from that perspective, ESG and some components of that were already built in into investment thinking for firms like us. So when you talk about what's happened in the pandemic, I think whatever has been happening over the past 15, 18 years globally and maybe the last 3, 4 years locally, I think that's got accelerated in the investment thinking. And eventually, it's not just about the new funds and the ESG funds, etc., which anyway, there have been many. The thinking within the investment community, within the advisor community, within the distribution partners we have, there's a real heightened sensitivity that this is something really important, which works on both sides. One is performance of the portfolios, on the other side, responsibility towards society, environment, etc. And people, everybody, investors, large body of our intermediary partners, and certainly the manufacturers are really seized of the situation that we really need to make strong headways to ensure that an ESG incorporated or integrated process is the way forward to meet one, return ambitions, but more importantly, responsibility ambitions and aspirations of all the stakeholders. Coming specifically to last 1.5 years, as you know, a lot of funds came in. I think there were 6 or 7 ESG specific fund launches in beginning 2020. Different AMCs have used different strategies. Some have used a more scoring related model. I think scoring is anyway part of the process. And some like us have really integrated it into our own investment thesis and processes to ensure that we really have companies in our portfolio where these companies are responsible, and hence to that extent the risk in the portfolio from these three aspects is certainly minimized. So number of new funds, I think the AUM of the industry has grown fourfold over the last 2 years. So significant activity, and I think as these NFOs and new funds have come in, there's a large amount of communication which has gone from the industry to both, as I said, the intermediary partners, the distribution community, as well as the investors. And I think there's a real understanding and acceptance, and especially in the pandemic, and when we see issues around environment, issues more around social sustainability. I mean, we all know that there's a segment of society which has got really hit very hard. So I think there is a sensitivity that yes, whatever business does or whatever we as investors do has to be in line with the stated approach of being responsible citizens and responsible investors.
But I mean, eventually the time will come where I mean, to my mind at least, there shouldn't be a need for a specific ESG fund because all funds should be following that principle at some time. Maybe not just yet. But we know that SEBI is going to introduce, the ESG criteria for the top 1,000 listed companies. And as of now, we're seeing that in an industry which has 40 plus AMCs, there are less than 10 ESG focused schemes. So, do you think with the introduction of SEBI's criteria, I mean, there might be more number of schemes? And does that matter? Is there enough money coming into ESG schemes for other, maybe your peers also, to start launching more funds?
Two questions in there. I mean, one is whether ESG matters. And I think it does matter. I think increasingly at the margin, though, it's still at the margin in India. Globally, obviously, it's a very different story. At the margin in India, as I said, a lot of activity over the last 2 years. It certainly matters. Now, why some of the others have held back launching more ESG funds is something which might be dependent on. It's not an easy exercise. If your investment strategy has been not that much focused on sustainability, and if you've been more, uh, I would say, medium-term investor rather than a real long-term investor, then there are certain changes which you have to make into your investment policy and strategy, etc. And I think there is enough amount of work needs to be done. You did talk about data being available, and now the BRSR and the Business Responsibility Sustainability Report coming out. So today, if you really want to do an ESG analysis, it becomes a little difficult, and that's why it takes time and effort to really put in place an analytical process and a way to evaluate companies. So I'm sure this will all come. The fact that SEBI has come out with this means a lot more data will be available going forward, which will make it easier for people to compare and build out their processes. So I think it's just work in progress to my mind. The first thing, which is why essentially have a separate ESG fund, and that's absolutely right. I think it's bang on. I think initially when we started talking about ESG in India, people had the thought that, hey, ESG, if you follow this kind of investing, maybe your returns will actually be lower. Yeah. So the thought was, and that is, I mean, we've seen that happen globally as well. Maybe that happened maybe 15 years ago in the global markets. But essentially, over a period of time, we've seen actually sustainability, and I'm using the word sustainability, which obviously includes ESG. If you have sustainable style of investing, you actually do much better. I mean, that's the data which has come out. We have long-term data in global markets, but even the short run, we have good quality data, though its tenor is short, but it's there from the Indian markets as well. For example, 21, I think 2021 ESG indices did better than mainstream large cap indices by about 300 basis points. So eventually, as we start to say that putting sustainability at the center of your portfolio construction, there is no way but to put ESG also in there, along with management quality, along with efficiency, vision of the management, execution capability. I mean, these are things which we are already well taking into account when we build portfolios. Corporate governance, etc., has anyway already been in there. So now that we think we want to future-proof our portfolios, control all the risks, make a contribution to society and environment, I think ENS automatically get in. And I think it's just a matter of time when all of us will say that the entire investment process looks at ESG very carefully. This is something which anyway is being asked for from our international investors, people who have seen this space a lot longer. I think the first thing which they would like us to see and ask us of us, what are our ESG practices? So it will become absolutely mainstream, and maybe over a period of time, you won't really need separate ESG funds, Sumaira. Completely
Yeah.
agree.
Absolutely. And even this question of returns, I mean, by all logic, a ESG compliant company would be more stable, and therefore, I mean, over the long term, which is the rationale for investing in mutual funds, is the long term potential, I guess, would be there, right? But one thing is to invest in companies which are complying with ESG, right? The other thing is to invest actively in companies which are working to improve or do something positive to society, which is what we call impact investing. I mean, do you see impact investing growing in India? What is the difference really, I mean, to your eyes as an investor between ESG and impact investing, and which is more beneficial in the Indian context?
Impact is, I think, more to do with a specific positive outcome which you want to create. Yeah. So I would say that people want to work, let's say, women upliftment, or they want to do with, let's say, the lower strata of the society in terms of economic terms, and wanting to create a difference in terms of providing daily livelihood, etc., things like that. It creates a massive positive impact. The financial returns from it might be sustainable or it may not be. I think that is secondary. But obviously, a very, very important area, and it is finding a lot of it's. I would think the investors who are looking at ESG and have been looking at it closely, they are taking it to another level and say, my investment, whatever money I have, is really going to improve the social landscape or the environment landscape wherever I invest. So we've seen of funds wanting to, let's say, invest in microfinance, which basically helps the the lower strata, the weaker section of the society really take benefit from that. So these can be fairly directed returns. Yes, if there has to be sustainable, have to be reasonable, but that may not be the primary objective. ESG investing, on the other hand, as we look at it, as sustainability of all our investments. So let's say you have a portfolio of whatever 30, 40 companies, and you have to ensure that none of these businesses will get affected on the downside because of this risk. And I must add one more thing. When you're looking at investee companies, if they don't score high, and while we do not have quantitative scores today, people generally know what are the companies which are socially and economically and ecologically responsible. And that is affecting them in two ways. One is customers are saying yes or no to your product, and so also your employees. I mean, they want to work for purposeful organizations. And having said that, to that extent, even some of these companies, while we may not say have become impactful or they are pure impact companies, but they are certainly becoming more responsible. So I would think our ESG approach is more to do with sustainability of the businesses we invest in, without really taking up uh, asking for a specific impact of each of our portfolio companies. Whereas impact is more about, you have a particular target, you want to, let's say, create 100,000 jobs or get 1 million people out of poverty, etc., etc. And there could be many related to environment as well. And you want a targeted investment in those initiatives which help you achieve that. So there's a clear difference, but yes, the underlying theme is a little bit of more sophistication and more responsibility coming on the impact theme versus the ESG theme.
Okay, so it's a more focused area of ESG. So in the budget recently, we have heard the announcement that green bonds will be introduced. You think the mutual fund industry will have much appetite for it?
So this has just been announced, Sumaira, the green bonds. I think internationally we have a lot of demand. So many Indian companies have raised money internationally. Locally, it still seems to be a little early, but some of these things, I think the time has come or will come relatively soon. We do hear some of our investors talk about ESG and green investing. I think we'll have to wait and watch what is the uh, issue calendar, issue size. Are there enough opportunities for us to do a fund around it? I think the start will be slow. We do a green bond or a green investment fund, and then we'll have to take it to investors. As things stand, I think the interest is fairly low. But I think as we really have a product in hand and we can satisfy the demand, I think it's a case where supply will create the demand. If we say we have a product, I'm sure there will be enough investors uh, to begin to look at these funds.
And we've seen a very successful COP26. India has also made a lot of pledges over there. So, in that context, plus, given that SEBI is mandating ESG disclosures for the top 1,000 listed companies, what will be the themes which will dominate the Indian context?
So first and foremost, I think is data. I think uh, just the SEBI's disclosure norms, and next year it will be mandatory for the top 1,000 companies, and that pretty much covers the entire investment universe from an institutional perspective. Once that is in place, I think that's the real essential ingredient. After that, it is up to the willingness and the initiative which every AMC kind of takes to use that data and make out uh, an investment strategy stroke philosophy of and lay it out for investors at large. As my experience has been, as you talk more about risks and mitigation of risk and sustainability, investors who have not been so much focused in this area will start to talk about it, and that's a great place to start. With everybody talking about it, I think this area will anyway get a fillip. The other part of COP26, as you said, the Conference of Parties talking about global climate change, etc. I think some serious commitments various governments have put in place. The net zero initiative, and then even the Chinese president talking about carbon neutrality by 2060. I think these are really large commitments. And I think all businesses, our investing companies and we ourselves, have to take cognizance of that fact that business has to be run differently. You talked about the pandemic in between. I think the social construct and the impact which some of these events have on society at large. Pandemic has been one side, but climate change itself will have a very large impact on, as I said, the weaker sections, agriculture, manual labor, etc., in rural parts of the economy, example. So it's great that all this discussion is coming mainstream. Government will lay out their expectations from the corporate sector, providing incentives, stroke disincentives on the kind of behavior that they would like to see. So yes, net zero, very important part. From our point of view, what we are seeing globally anyway, decarbonization of portfolios. Today there is portfolios which obviously have companies which don't have, which are not carbon neutral in that sense. So they do have a carbon footprint. And so we have to start thinking, how do we nudge these companies to look at what the global picture is and the global trend is? And eventually, the day is not far where I think we will all have to start giving out what is the carbon footprint of our portfolio. So I think we have to start looking at decarbonizing that. And then the social impact, as I said, I think that's going to become very critical. I think globally, the millennials, young employees, etc., are already asking for what our purpose of organizations will be. The kind of companies which we would want to invest in from a sustainability perspective have to be companies where their customers and their employees are confident and comfortable with these companies. Because if you don't have talent, these companies won't do well, and if you don't have customers, again, these companies won't do well. So we are looking, I think all of us are going to look for very significant change where it needs to be done in terms of the overall, what I should say, the policies which these companies will have to start to follow. So all in all great things. I think we're building a much better world. I think all of us, corporate sector, us, government, can really get together to make a meaningful difference. Many themes will emerge out of this, as I said, net zero, decarbonization, social impact, etc. But biggest one will be data will be available, and I think that has been one of the handicaps as we've gone about trying to implement our strategy over the last 3 years. And I think once that is available, I think that will be a real game changer.
No, absolutely. Because even now there are investors who are focused purely on returns, but there is a growing tribe that wants their money to be invested in a socially responsible manner. And I guess that tribe will only grow from here. Thank you very much, Mr. Nigam, for joining in and talking about the prevalence of ESG in India. And for everybody who's watching, I hope you enjoyed watching this video. I hope you learned a little bit more about ESG, and I hope that it will be beneficial for you when you're looking at making your own investment decisions. So thanks very much for watching. Stay safe.